Joining us now to talk more about it is Brandon Oglenski. He is Barclays Senior Airlines and Transportation Analyst. And market a little concerned about what they're hearing. But, Brandon, there's a lot that you liked that you heard from the company last night.
That's right, Becky. And thank you for having us on. Look, I get it. We go through cycles, right? And the pandemic just compressed everything because we paid everyone to stay home. We bought a lot of things online that really filled up FedEx and their competitor UPS very quickly. And now we're seeing the tail end effect of that as everyone goes back to traveling and spending money on airlines. So I think, the bigger issue here is that FedEx is going through a once in a 50-year transformation of the business. They're actually merging their overlapping ground and express networks, where they have overlapping pickup and delivery drivers and trucks, facilities. They put a lot of capital into the ground business the last 20 years, but the express business has seen pretty lackluster volumes over that time period. So there's just a lot of efficiency that this company is unlocking. And, they're doing it with a new leadership team. They're actually looking for an external CFO. I think the first senior executive coming from the outside of this company since the 17 years that I've been covering. So I think, look, cycles go up, they go down for sure. I think we're actually coming out of a cycle here. We could talk about inventories and why we think import activity is actually going to pick up later this year. Company actually guided to that. But this is more about transformative change at the company that we think can more than double profitability.
I think I read that they had let go something of like 29,000 employees already as part of this transformation. Am I right on that?
Well, there's obviously seasonal employees, and then the employee counts will come up and down with the cycle. I mean, as you said, volumes have been negative, I think, for 5 or 6 quarters now. But I do believe, we were just out at the port of LA Long Beach last week. Imports into this country have been down about 20% now for about 3 quarters, 15 to 20%. That's really not a sustainable level. So I know everyone's worried about rates and GDP. But even if we take consumption down, I think activity in the supply chain needs to step up from here. I think that's what FedEx was trying to get at last night.
You've got a price target of $280. That's more than a 20% increase from where it is right now. And that's even before you talk about this decline that you're seeing this morning. What gives you that faith? That's a big move.
Well, and arguably, Becky, if they do things right, margins here could more than double in the business. Because remember, there's all this overlapping operational cost that they have that their competitor UPS doesn't. And what FedEx has that UPS also doesn't is a non-union workforce. So if they can make this right, we actually think profits could improve beyond their competitor. And I would argue that in that scenario, the market cap could more than double here. These are one of these opportunities that we see in our career as analysts, like going back to Canadian Pacific when Bill Ackman first brought in Hunter Harrison, or when Hunter came over to CSX. And these stocks have these very long runways because what you see is a transformed operation, better profitability, and better cash flow. I think the market still doesn't really believe this is happening.
You think UPS will actually go on strike? I think August 1st is the date, potentially.
Well, the rhetoric has been very hot, and for sure the Teamsters understand that there's a lot of inflation in the economy. We think, CPI has moved about 15 or 16 points from their last contract. I think inflation on that has been a little bit less. So for sure, at a minimum, I think the union wants to keep purchase power parity. I think, if anything, this is good for FedEx because if there's a lot of cost inflation at their competitor, there's going to be a big focus on price. And, Carol Tomei came into UPS a few years ago. She was really transformative there as well because before, between brown and purple, it was all about service, who can gain the most market share, with kind of an afterthought about what's the profitability of this business, what's the returns to shareholders. I think with the change at UPS and now the change at FedEx, this is becoming a much better business.